Ladies and gentlemen, welcome. I am Dinish Gramm. Here, in real time, right before your eyes, I will dissect current market strategies to answer the ultimate question for both of us: how to protect your capital and multiply it in today's ruthless technological and economic reality. Welcome to the channel. Welcome to A Naked Chart Looks Predictable. If you study it across different time frames, you form a subjective opinion, shaped by the graphical projection of dozens of global events that influenced the price in the past. This is the ultimate trap. The crowd loves with their eyes, and the human brain desperately wants to believe in the best, in endless growth and profit. Look at the community. Hundreds of draftsmen drawing the future direction of an asset's price. They forget what is primary and what is secondary. By forgetting that charts are merely a retrospective mirror, you lose the essence of logic and common sense. That logic is rooted in a simple physical law. Every thermodynamic system strives for a state of equilibrium. Let's look at what throws the market out of this equilibrium and where that equilibrium actually is. By operating with this logic, understanding the laws of physics, mathematics, economics, and geopolitics, we can trade probabilities, escaping the trap of trading price. I am Dinish Gramm. In real time, right before your eyes, I will dissect current market strategies to answer the ultimate question for both of us: how to protect your capital and multiply it in today's ruthless technological and economic reality. Welcome to the channel. Let's translate this into practice. When I activate my technical setup, you do not see classic support and resistance lines. These spheres on the chart represent concentrated liquidity clusters. These are the exact zones where retail stop losses and liquidation triggers are gathered. This is the fuel that powers algorithmic market makers. Institutions do not care about your trend lines. They hunt these zones to execute their massive orders without slippage. But we do not take the chart's word for it. We demand mathematical confirmation. To get it, we switch to Coinglass to analyze the raw data. What you see here is the liquidation heatmap, an X-ray of the actual market imbalance. Look at these dense, glowing zones below the current price. This is where billions of dollars of over-leveraged retail margin are trapped. The market engine is forced to release this tension and sweep this liquidity to restore equilibrium. This is exactly why the mathematical probability of a downside move to absorb this capital is exponentially higher than a move upward into empty zones. We do not predict the future. We read the architecture of the market. The ability to survive and multiply your capital in this changing world of institutional interests and geopolitical conflicts is incompatible with a naive belief in the rise or fall of the market. It is only compatible with a sober assessment of macroeconomic data and an understanding of institutional psychology. Let's abandon emotional execution together. Remember, exchanges and mega funds control this market by relying on the two most ancient foundations of human nature: the greed and fear of the crowd.